What is really going on with the housing market today? I have been seeing so much conflicting information out there, it can be nearly impossible for the average person, or even if you have a good knowledge base of real estate, to figure out what is actually happening, guys. So right now, a recession is not a recession. Interest rates are up, then they're down. Some housing markets are crashing, while others have still rising prices. And even though the economy is slowing down, median home prices keep going up. So what is going on? Let's try to make some sense of this in today's video. Now, the first thing that's probably the most shocking, even to me, is that mortgage rates today dropped below 5%, supposedly to 4.99%. And that's according to the Fed chart. Now, I looked this up as if I were trying to get a mortgage right now to see what would be my actual rate. And when you look this up, even if you put that you have an over 800 credit score, it's still showing that your rate would be about 5.4%. So I'm not sure who is actually going to be able to take advantage and get these 4.99% rates, but maybe a few lucky winners out there, like lottery winners. But don't count on this being the new norm, that's for sure, because as we've seen, mortgage rates are starting to fluctuate because of the uncertainty with the economy and what the Fed is going to do. But I think it's pretty clear at this point that the Fed is going to continue to raise interest rates, but ultimately it's because the Fed is trying to curb inflation, and that is what's causing this volatility. And right now, when you see rates start to drop like this can look like a situation where, oh, maybe it's time to jump back into the market. Now, I think people should do whatever they feel like is right for them, but and also, right, if you were looking at 6% rates a week ago and you can get something in the low fives now, and combine that, if you're in a market with prices starting to drop, this could actually be a good opportunity for you. Now, this by no means is the bottom of any of the housing markets that are dropping, and I do think we're going to overall continue to see interest rates go up. So this could be a temporary small window of opportunity for some folks. But overall, I would not take these small jumps as a measure to just go all in and get back into the market. Today I'm walking on Pine Tree Drive, and a couple weeks ago we walked on LaGorce, which is the opposite street over from this one. So today we're doing Pine Tree and see what we come across today. All those houses over there on the other side are all waterfront houses, super expensive. And the ones on the other side of me here, not quite as expensive since they're not waterfront. There was an interview today from the CEO of a big institutional investment firm called Carroll. The founder's name is Patrick Carroll, hence the name Carroll. And he thinks that buyers waiting on the sidelines right now is still a good idea given the state of the market, because he basically said in his interview, people are buying the bonds that support the 30-year mortgage, are doing this because they're looking to flee to safety, right? People are getting nervous. Investors who buy these bonds are scared because the stock market is in turmoil as well, and so they are buying these bonds. But he thinks they're afraid of all the things that are out there that really nobody can predict right now, like the war in Ukraine, how high inflation's going to go, and how bad the recession is going to be. This guy Carroll also doesn't believe that the recent decline in interest rates is going to spark a demand in housing, which I don't think it will either, for a couple of reasons, guys. The first reason I don't think it will is because I think it's going to be very short-lived. I think easily in another week or two from now we could see the rates go back up, so it's probably temporary. And now more home buyers are aware that the market is not that healthy right now and are taking the wait and see approach to figure out what they should do. And I think that's the smartest thing to do right now for pretty much anybody who's thinking about buying a house, unless you find that perfect opportunity that we just talked about. This one just sold. Let's see for how much. Does look like a pretty big house. But this guy, Carroll, obviously has a lot of rich investment buddies, and their number one concern right now is the war in Ukraine, as it can affect all these other things like the interest rates and supply chain issues and things like that that can make the economy even more unstable as we're heading into a recession. And he still thinks, just like me, that mortgage rates are going to continue to go up in the long term, and that this drop in rates is just temporary. And so basically he's predicting that single family home prices are going to start dropping even though inventory is still tight due to mortgage rates continuing to go up over time. And I think that makes sense as well. The higher these mortgage rates go, the less demand we're going to see to purchase any type of real estate, not just single family homes. Now, speaking of buying a home, nationally, home buyers' median income rose 6.8% this year to $94,000, but the median price growth was 29%. So even though people are making 6.8% more money, homes are still way more expensive than they were a year ago, which is not news. We all know that. And the worst part about this, guys, is that if inflation, they're saying, is at 9.1%, which we know is a lie, it's probably somewhere in the double digits. Who knows? Could be 12, 15, whatever it actually is. But even if you use their number, with that 6.8% raise, you're still effectively losing money, because if inflation is 9% and your raise is only 7%, you're still losing 2%. Your purchasing power dropped by 2%. And that's something very important to understand about just how much inflation can eat away at your budget right now. This one here is for sale. It's like they got a little courtyard over there in the front. That's something unique. I think this gives the real picture, guys, of why it's so important for inflation to be the number one concern right now, because even though people are getting raises and home prices are up, it's still making everything less affordable. So that's why the Fed is trying to tackle inflation even at the expense of the economy, because as we can see, the economy overall will continue to suffer until inflation goes back down towards their target of around 2%. Now, the interesting thing about this report is that even though the median income rose by 6.8%, if you live in one of these hot cities like Boise, Austin, Texas, or Cape Coral, Florida here, or even Miami where I live, West Palm Beach, then the average home buyer actually had a much larger increase in income this year. Like in West Palm Beach, for example, went up 17%. Here in Miami, also 17%. Cape Coral, 18.5%. Boise, Idaho, 24%. But the thing is, guys, these are also the markets where the price of homes also went up exponentially higher as well. Like in Boise, it went up 53%. In Austin, it went up 48%. Here in Miami, it went up 38%. So even though in these, trendy cities that remote workers have been moving to are getting hefty raises, essentially, it's still not enough to tackle inflation combined with the massive surge in home prices that we've seen. And they think that these markets are going to be the most susceptible to a downturn when the recession gets bad. So that is yet to be seen, but we will be finding out very soon. We have another one for sale here. Lots of houses for sale on this street. That's one reason I wanted to come over here today, because we haven't covered this area yet. And I knew there was going to be a lot of them for sale, because I drive through here and I see the signs. Now let's talk a little bit about remote work for a second, because it says in this report that these housing markets, even though they're susceptible to a larger downturn than, say, a more stable market in the Midwest because of the recent surge in prices, it also says that they think that these markets actually will come out okay on the other end, because so many of the people that live there now make these large salaries. And they're referring to remote workers here, guys. And like I said before in previous videos, these remote workers are making significantly more than the average person in an area. Like, let's take Miami for example, since I live here. According to this report, the average home buyer in Miami that got a raise is making about $104,000 a year. Now, I don't know exactly what the average household income is in Miami, but I think it's around 60 grand. I'll put it up on the screen after I look it up here. But guys, it's nowhere near 100 grand. And this is why, like we were talking about before, how having too much remote work in any given area can be detrimental to the local housing market and push locals out who live and work here. So imagine if you're somebody in Miami that lives here and you're one of these construction workers working on one of these houses, or you have one of these landscaping companies, something like that, that we're seeing as we're walking through the neighborhood, and your income is like, say, 60, 70 grand a year. You can't compete with people that are making over 100K a year to buy a home, because they can simply outbid you, they can pay more, and they're also part of the reason why home prices have been going up so much here among the other areas listed. Like Phoenix is on this list, Tacoma, Washington's on this list, Salt Lake City's on this list, you know, Austin, Texas, like we said before, all these big boom towns, okay? So I think it's gonna be interesting to watch these boom markets, not only from the perspective of if they are going to suffer some sort of housing market crash, but it's also going to be interesting to watch them to see how exactly things are going to play out in the long term now that remote work is essentially here to stay for a lot of companies. Because this leads me right into the next segment of the video, which is that there are more companies that offer remote work to their employees that are thinking about giving up office space in different cities all across the country and using their annual real estate budget for other things to try to grow the company. So they're essentially looking at giving up office space in places like, you know, Chicago, San Francisco, Miami, wherever they're at, and trying to, you know, give employees what they want with remote work and let them work remotely. So a lot of people who are remote workers, I'm sure, are thrilled about this, and I certainly would be too if I was, you know, employed with one of these companies that's doing this. But we have to look at what could be the potential consequence from this in the long run. Because these remote workers can essentially live wherever they want, they're going to be maybe the leaders in which housing markets are going to boom and bust the most in the future. Because if enough remote workers pile into a certain area, now that these boom towns are getting too expensive, these remote workers are going to be able to sort of dictate where the next boom towns will be over the next decade if remote work remains a strong trend moving forward. But we can see there's definitely a pushback on the remote work situation from some companies. You know, you have places like Goldman Sachs, you have Elon Musk, and other companies telling their employees that they need to come back to work, while others are starting to accommodate the remote work more. So it's going to be interesting to see who's going to win this battle. Look at this. Another house going up. Can't even walk on the sidewalk here. They got everything blocked off. But what we're definitely seeing is some companies being a lot more flexible and accommodative to their employees than others. Like this company that was in the article, for example, they are called Brex, and they have roughly 45% of their employees remote right now. And when they asked them if they would come back to the office, only 10% said they would. So Brex is one of these companies that's giving up a lot of their real estate space in favor of keeping their remote work employees and expanding the company in other ways. But if we look at places like New Jersey, where a lot of these companies got these big tax breaks that are now forcing their employees to come back to work because the local economy is suffering, it's going to be interesting to see in these boom towns if the local economies are going to remain strong, even though there might be less and less office space being occupied by people actually there. So who knows how this dynamic is going to play out. We got to keep watching for that. Another one for sale, guys. Actually, it says pending on the sign. Check this out. They got a banana tree right out front. That's pretty cool. You got some actual bananas growing on there. Right here too. There was another Senate hearing about what's going on with affordable housing, and it turns out that more housing is owned by LLCs than ever before, guys. And the reason why these LLCs and S corporations and things like that were started to begin with was for small business owners like myself. I have an S corporation for my real estate business and now for YouTube. And it's so small business owners can essentially take on risky business ventures without being personally liable for going bankrupt, for example. But as usual, you have bad actors that are starting to ruin it for everyone, and this is how it pertains to real estate. Because, for example, what an investor will do is they'll buy the property under the name of an LLC, and as soon as things start going south for them, they can just let the place go and essentially let the county take the place back in a tax foreclosure, and this ends up being some sort of a write-off for them. So they're using these type of foreclosures as a tax write-off for their company, and essentially making it so they don't owe money, you know, on this company's tax return by just letting it go in foreclosure. Now, obviously, something needs to be done about that. It's always one thing after another, right? All these different games that companies are playing, and the politicians too. Obviously, they're responsible for letting people get away with this or not. So just yet another developing thing we need to look at to see how this is going to shake out in the long run. And the worst part about this is when these properties are let go to go into foreclosure, that takes that house essentially off the market for, you know, an unknown amount of time, because it has to go through the foreclosure process, and that's a home that otherwise could be sold to an actual home buyer that wants to live in the property. So it just creates all sorts of problems. I decided to circle back over here to Lagorce instead of walk back on Pine Tree, because there are so many spots that I can't walk in, like you guys could see. So it's pretty annoying. It's much more laid back over here on this side of the street. None of the sidewalks are closed either. People are definitely interesting creatures, because there was another article today that says the 50 U.S. counties with the largest percentage of homes facing high fire and flood risk saw their populations increase by an average of 3%, respectively, from 2016 to 2020 due to positive net migration. And the funny thing about this is these are some of the most high-risk areas, and probably the most expensive when it comes to insurance. If you live in a high-risk fire area, you need to have fire insurance. If you live in a high-risk flood area, like here, where we're walking through right now, you need to have flood insurance. And those things are very expensive, yet people are flocking to these areas more than ever, guys, which is an interesting dynamic to say the least. In fact, get this, it's actually more expensive to move to one of these high-risk areas, like a high fire risk area, for example, had a median home price of $550,000 in April of this year, and a place that was in a low-risk fire area, median home value only $431,000. So it's kind of pretty crazy that the safer areas, so to speak, to live, where you have less danger of fire or flood, are actually cheaper. And I don't know what there is to attribute to this. The only thing I could even think of is that these areas that are at higher risk are also at higher desirability. Like here in Miami Beach, for example, a lot of people want to be here, in Florida in general, because of the amenities we have here. You know, the weather, the beach, whatever, but it comes with its risks. And just like I made the video about California the other day, for me, liking Northern California and the Marin County area, probably some of those areas come at a high fire risk as well. So just seems like some of the most high risk areas just happen to be the most desirable, which is kind of crazy when you think about it. I thought that was just something interesting I wanted to share today. Check it out, this one's still for sale also, it looks like. We walked past this one 2 or 3 weeks ago. Let's see what's going on with it. Now, because the news keeps changing so much about the housing market, this is why I think right now, guys, it's more important than ever to really try to pay attention to the most recent trends. But you know, this really applies to somebody that's looking to buy or sell a home right now. If you already have a place and you don't care because you know you're not going to be moving anytime soon, then of course it's going to be less important to you unless you're just curious to know what's happening out there in the market. But honestly, in the 14 years that I've been in real estate, I've never seen a market quite like this where things are so volatile and changing by the week. It seems like there are so many things to pay attention to with interest rates, with inflation, and with what these companies are doing, what the government is doing to try to fight some of these housing issues, or maybe they're not doing anything at all. There's so many things to pay attention to. And I think all these things are really more pertinent to buyers right now more than sellers, because you know, sellers, they don't have much to worry about, right? If you have a lot of equity in your house and you price it right, you're gonna sell it, and it's not that hard to be the seller. But being a buyer right now is some form of torture because of the fluctuation in interest rates, seeing some markets go down while others go up, and worrying about inflation, worrying about rent prices going up. So I definitely feel bad more for buyers right now than for sellers, because you know, sellers more or less got it made at the moment. So some people have mentioned that I'm biased, you know, towards buyers. It's not that. I just think that buyers essentially need more help right now than sellers do. So a lot of this content has been geared more towards, you know, trying to help out buyers and give them a leg up. But of course, I give tips for sellers too, and you know, let them know what I think about selling. But I think in general, it's not that hard to sell a home, guys. It's just when people play games with the price, like we saw in the previous video, and when they have bad advice from real estate agents or friends that make the process more complicated than it should be, is really the main problem. But overall, it's easy to be a seller if you just follow the basic principles of selling a home like people did for many years before all this madness started. If you guys enjoyed this video, please subscribe to the channel and check out my next video on the screen right over here, and I'll see you over in the next one.